What's up, all of you beautiful subscribers? Welcome back to the Chapple Show. So we got another billionaire investing strategy today, which we are going to cover. So today we're going to cover Chris Sacca's billionaire investing strategy. So who is he? If you don't know who he is, most of you have probably seen him on Shark Tank as a guest shark that goes on a few times a season. He's invested in companies like Twitter and Uber. He had an angel investment company. He's invested in over, I think, 50 companies, 50 or 60 companies that have all done. Most of them have done very, very well. He's a very successful investor. So we're going to talk about some of his tips and some of his strategies in this video. So let's get started here. What's the very first tip he recommends to someone who wants to invest in a company? So this isn't specifically with stocks. This is for like investing in a startup company. What does he recommend that you do beforehand? And this is make sure that you can add value to the company. Before he even invests in anything, he makes sure that he can add value. So what's a good example of this? I like to think back to shows like Shark Tank or Dragon's Den, where you got five investors looking to invest in the person who's pitching. And so sometimes you get a really good company up there. So you get a good company, maybe they're a food company, maybe they're a games company, okay? They've been selling board games or something like that. They have $1 million in revenue, and on that $1 million, they made $300,000 in profit. That's a very, very good company. What happens, as you guys have probably seen if you watch the show, is that even though that this company is super successful, there's always a few dragons or few sharks that can't invest for the simple reason of they'll say something like, I don't know enough about the space. I don't know how I can add value, so I am out. And they say that a lot. And that is the mark of a very good investor like Chris Sacca. So he always says, look, I don't invest in companies that I know nothing about. I don't invest in companies that, I can't add value to. Sorry, I was going on another point there. I don't invest in companies that I can't add value to. So even if they're a good company, I just cannot invest in them. So we're going to touch on that point a little bit later, actually, a little bit more, and expand on that. We're going to move on to number two. Actually, no, the first analogy for number one is actually by adding value. I wrote down this analogy here. So it's kind of like, if you're investing in a company, don't just be a passenger and go along for the ride and hopefully the driver will take you from place A to place B by themselves. Be a good passenger, be a good passenger. Pick a good music playlist. Make sure that the drive is organized. Make sure you're the GPS or the navigator of the road trip kind of thing. You're not the main person, you're not the main driver, but you're there for assistance and making the driver's life a little bit easier to make it easier to go from point A to point B. And that's how you should be with investing, especially in startups. Be there to help out. Even though you cannot do most of the work, make sure you're there to help out, because that can be a really big boost, especially for a lot of startup companies. If they have a billionaire investor that has a way into some retailers or a way into some, maybe some sort of staff or has a good sales team, that can be the difference between making a $10 million company and a $100 million company. Okay, so we're going to move on here to the next point, actually. I want to talk about this, which is he only invests in companies that are already good. So it's kind of conflicts with the first point a little bit here. He only invests in companies that will be fine on their own, but he can still add value to them. So the example I like to use, well, let's go back to the first example. That games company that I talked about has $1 million in revenue, $300,000 in profit. So Chris would invest in that company if he knew that they would be fine even without his help. So without his help, they could become a $5 million company. And so what he hopes is that when he invests in them, not only will they become a $5 million company, but he will be able to add value to make them maybe a $7 million company or a $10 million company. And that's a typical thing that he does with investing. As he invests in those types of companies, the ones that will be successful on their own, but he can add value to them at the end of the day. So we're going to move on here to the next thing, which this applies for stock market. This one applies for the stock market, which is say no to most investments. And this is a big thing here. So for rookie investors, a lot of you in the stock market, that's what I'm going to relate it to. If you're investing in the stock market for the first time, you're a rookie, you're a beginner, people just want to jump into the market because they want to just jump into the market. They want to invest in something and hopefully it makes a good return. But even as you guys know, when I look for a stock, If you guys look on my program, on my website, on my stock market mastery course, when I want to invest in a stock, I have no idea what I'm going to invest in. Sometimes I have a sector that I want to invest in, but I have no idea what company I really want to invest in. And I will fish through minimum, 40 to 50 stocks before I even consider investing in one. Sometimes it's 100 or more. And that's the important thing. So I say no to 99% of the stocks that I look at. I don't invest in 99% of the stocks that I see. I try to say no to most of them, and hopefully I'll find one or two good ones out of whatever I'm looking at that day, and I'll invest in those. And that's the way it is with stock market investing and with just investing in startups. I mean, think about, how, I know that this is kind of the opposite example, but here's a good example of how many times people get turned down, is Howard Schultz of Starbucks. He got rejected 250 times before he actually was able to get someone to invest in his company. He was 254 times, and 255, the investor said yes and gave him some money. That's some perspective for you guys, is that most investors will say no. Most successful investors, angel investors, will say no to most investments. And that's just kind of the way it is. Sure, occasionally you'll miss on one investment or two investments that became billion-dollar companies, like Gary Vaynerchuk missed on Uber. But at the end of the day, Gary Vaynerchuk's made a company that's worth $300 million or whatever, say $400 million. And he's done well because he said no to a lot of investments that would have been terrible. That's a good example. So say no to most investments, whether it's in stock market, real estate. Make sure that you look at as many as possible and occasionally say yes to one that you really like. We're going to move on here to number 4, which is, I don't know how to spell this. We're just going to say scale instead of the other version of that word. So what he does is he invests in businesses that are scalable. And this can apply to the stock market too, especially a lot of companies that IPO. So for example, he invests in companies that let's go back to that board game company. If this board game company was not selling board games online, and it was just a board game company that was bricks and mortar, somehow making $1 million a year, I know, bad example, $300,000 profit, Chris Sacca wouldn't invest in that because it is a bricks and mortar business, and all they want to do is just sell more games at their store or get more people into the store. That is not scalable. Investing in a scalable business is like investing in an e-commerce marketplace like I am making right now. Investing in companies that can have millions of customers or clients or tens of millions, or like an Instagram, Facebook, all of those big social media sites, so scalable because anyone with an internet connection and friends will want to download that app and can use it. And it's really easy to use and it's fun. So investing in scalability is good. Now, saying that, people can make a really good living by making and investing in companies that aren't scalable. Investing in that board game company with a $300,000 a year profit, I mean, that's a good living for a lot of people, $300,000 a year. So, I mean, it depends. But for Chris specifically, he likes scalable companies. He likes those big internet tech companies, or some sort of company that can scale up to $1 billion or more. If he can't see that vision for creating a $50 million company or more, he's not going to invest in it. That's just the way it is. So we're going to move on here to number 5, which is, I mean, this applies to anything, just in life, and stock market specifically, and investing in startups and so on, which is invest in your strengths. I've kind of talked about this recently in recent videos about how, that's a terrible T, in recent videos about how, one of the reasons I don't talk about gold investing, or I don't talk about silver investing, or investing in cryptocurrencies like me personally, or investing in some other commodity, is because I'm not strong in that category. I'm better at investing in stocks. I'm much better at investing in stocks, much better at investing in, I have a background in real estate. I'm a real estate agent, got my license. So I know a lot about real estate investing. That's why I talk about it. That is a strength. You don't see me going out there and buying Ethereum or buying silver or buying a bunch of other commodities that I don't know about, because that's not my strength. And that's how you should be when you are investing, is invest in what you know. For me, what I know is, I know real estate pretty well. I know financials pretty well. I like investing in dividend stocks. That's what I'm used to. I know I know a lot about the American economy, the Canadian economy, so I try to stick to those two specifically. I invest in my strengths. I don't invest in my weaknesses because I don't know where that's going to take me. Now, however, in life in general, one of the reasons why I'm doing pretty well and why I'm a pretty valuable commodity, I could go out right now and probably get myself a $150,000 a year job because of the skill set that I do have. And that's because I'm not the best at anything. All right, I'm not the best web developer. I'm not the best programmer. I'm not the best salesman. I'm not the best marketer. I'm not the best public speaker. All right, I'm not the best YouTuber, but I'm not bad at those things. And I, at one point, was bad at those. Those were weaknesses of mine, all of those. And one of the reasons why I succeed is because I try to make sure I have as little amount of weaknesses as possible. And so this can apply for investing, entrepreneurship, anything. Try to limit the amount of weaknesses you have, and life will get a lot easier. Life will get a lot easier. Your investments will be better. Your business will be better run. Just limiting your weaknesses. So if you don't, I know it's kind of hypocritical. I don't know a lot about commodity investing. Why don't I learn? Why don't I try to invest in that stuff? I could, it's not worth my time. I guess that's the other thing too. You have to kind of weigh where your time should be going into. Is it worth spending 5 weeks learning everything there is to know about commodities trading if you're only going to invest $500 into it? Probably not, right? So you're going to have to always weigh that. Right now, my time is most valuable going towards coding and programming. And that's what I'm going towards. That's why I'm not uploading 2 videos a day at this current second. It's because I'm putting in tons of time into learning that. So anyways, invest in your strengths. So for you guys, what does that mean? Again, just don't invest in sectors or stuff that you don't know a lot about. And if you want to invest in a certain sector, educate yourself on the sector first. Educate yourself in the certain stock first. If you don't know a lot about it and you want to invest in it, if you are just investing in Amazon because you hear it's really good and you hear that other people are investing in it, that's not the way it should be. Look into their financials. For me, I made a video on this. I spent 30 minutes looking into their financials one day. Now, sure, I already knew a lot about Amazon beforehand from looking into them before, but doing things like that, spending 30 minutes looking at their financial statement, spending an hour reading Jeff Bezos's book, or spending a couple hours looking at how their warehouses are run, what their plans are for the future, finding interviews and news stories and so on. So that's what you should be doing. I think that's going to wrap this video up here. So what do you guys think of this? What do you guys think of Chris Sacca's investing strategy? Do you agree with it? All these points here, they're all good. Seriously, I didn't really think about this, but this could be very, very similar to how I invest in companies. And I always thought that the most person I was similar to was Kevin O'Leary in terms of how he invests in stocks, always taking dividends and so on. Chris Sacca might be closer in terms of how I just think about investing in general. So we'll see. Anyways, thank you very much for watching. If you want to see my portfolio, if you want to learn how to set up your stock market account, if you want to learn how to run a business, check out my stock market program and wealth accelerator in the link down below. And I'd like to thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.